I will now pass the floor to Licinia Pereira, Financial Manager here at CINEA, who will give us a presentation on how to apply for life, and especially on the financial aspects of an application. Licinia, sorry, but I would ask you to be a bit quick because we are a bit running, yeah, a bit late. But don't worry, take the time you need, and we'll see later. Okay, thanks a lot, Licinia, for joining us.
Okay, thank you, Eva. Thank you, Bernd, in particular. I think you set up my presentation very well. So it's a pleasure to be here. It's a pleasure to attempt at giving you some tips and advice on the financial side. So we are here to help you and to guide you, and in particular to give you some information on how you would translate your action into numbers and to cost categories. So next slide, please. So we start with the reference documents. So I'm imagining that you're already very familiar with the first link, which is where you can get all the legislation, grant agreement, all the templates, and also, of course, the call texts, so that you can see the particularities for each of the subprograms from LIFE. Then the next one is the model grant agreement. So this is the grant agreement that you would be signing. Sorry, can you go back to the previous slide? Yes, thank you. So the second link is the model grant agreement. So this is the model of the grant agreement that you will be signing in case your action is selected for funding. So here you will see what you sign up to. So please have a look. Then the next one is the LIFE annotated grant agreement, and here is the grant agreement, but with comments, with an interpretation, with guidance. The last version we have is from 1st of April. It is not finalized. It's a live document, so we invite you to regularly check if there's a new version. And the last one is the rules for the legal entity validation and financial capacity assessment. In case you're selected for funding, you will be contacted by our services to validate your legal entity in the system to get a PIC and a LIER, but this is too early maybe to talk about that. What I would also like to mention is the next one, the financial capacity assessment. So if you plan to be the coordinator and you are a private entity and you want to have a look if your financial capacity is good or not, you can already go into this link, make a self-assessment, and then in case it's good, well, you have nothing to worry about. But in case it would be weak or even insufficient, it is a high probability that we would ask for a financial guarantee for receiving the first pre-financing. So just the quick links that we really invite you to look. Next slide. Thank you. So here we start with the roles in the grant agreement. So who are the participants in your action and who will be reflected in the grant agreement? Of course, the most important entity is the coordinator, because they will be the contact point towards us, the granting authority. They are the ones that sign the grant agreements. Then the beneficiaries, they are the other entities, your partners, who will also sign the grant agreement with the accession form. And then you might have affiliated entities. So these affiliated entities have the same conditions as the beneficiary, but they do not sign the grant agreement. And what is important is that there needs to be a legal or capital link between the beneficiary and the affiliated entity. However, it is the beneficiary who keeps the responsibility for this affiliated entity. Then you have another type of participant, which are called associated partners. Please differentiate with the life legacy. It has the same name, but it's different in the new MFF. These are participants that want to be in the grant agreement. They want to contribute. They will have tasks. However, they will not charge any costs to the action, and they will also not claim any contributions. They will also not sign the grant agreement, okay? Then you have other participants, subcontractors, in case you are thinking, because for one reason or the other, you don't have the expertise and you think of subcontracting, outsourcing some specific action task, they will be the subcontractors. Also potential recipients of financial support to third parties. I will go into that later on. And also in-kind contributors. Please note right from the beginning that in-kind contributions are allowed, but they are not reflected in the budget either on the costs or in the income side. So they are, if you will, silent participants. Next slide, please. Here is just an extract that you will find in the annotated grant agreement, so the second link that I mentioned earlier on. And here is just a description, who does what, who is eligible, are they in the annex, what are the conditions for the participation. And then the last column is where you will find in the model grant agreement some explanations into these different participants. For lack of time, I will not go into details, but you have this information here for your convenience. Next slide, please. So what do you need to do in financial terms? Bern has already gone a little bit over this. So you will be requested to fill in mainly two parts. The part one, which is the overall budget. I will show in a minute what it looks like. And here you will have to put per beneficiary or affiliated entity the costs that you will have and per cost category. So the different types of costs, personnel, subcontracting, etc. The associated partner will be there, but with zero costs. Then the next one is the detailed budget. And here is where you really go into the details and where you will be providing the justification. Okay. Again, it will be by cost category, beneficiary, affiliated entity. And of course, you will also have to submit the staff effort for associated partners. We really urge you to go into the call documents to see what cost categories are eligible and be realistic. Next slide, please. So here is what the first table looks like, so the general one. So you see here the columns, name of the beneficiary, country, what is the role, coordinator or a beneficiary, as affiliated entity, associated partner, then the personal costs, then subcontracting, purchase cost, travel and subsistence, equipment, other goods, works and services, the indirect costs, and so on and so forth, and also how you plan to finance this. So the income, any in-kind contributions, financial contributions, your own resources. And here it's important that the total costs equal the total estimated project in revenue. So the last column must be equal to the total estimated costs. Okay, next slide, please. Here is a print from the detailed budget, which the template you will also find in the reference in the portal, the reference document section. Here is the first part. So the staff effort allocation, you will need to put per participant and then how each participant is involved in each work package. Next slide, please. Next slide. Okay, thank you. Then we go into more details into personal costs, always per participant or affiliated entity, then the country, the number of person months, and then the average monthly rate, which we will be checking, and we will be contacting you if it's higher than the normal average rate foreseen for this for the country and the type of organization. And then you have the different types of staff costs. So the most normal one or common one, I would say, employees, then A2, A3s, don't worry, I will go into that later, SME owners without salary, then also volunteers, etc. Next slide, please. Then we will go into subcontracting. Here you have some instructions, as you can see. Very important, please only put subcontracting for action tasks that you will be describing in the work packages. You will be requested to provide a justification if this goes 30 higher than 30% of the total costs. Then other direct costs, you see here different rows: travel and subsistence, equipment, other goods, works and services, financial support to third parties, and land purchase. So please, here you need to provide the cost and then the justification. A justification which is enough for the evaluators to understand what this is and to give us some indication: is this eligible, is this exaggerated, etc., etc. Next slide, please. So how do you go about this? First thing is check the call document. What is eligible, and very important as well, what is not eligible? Always indicate in euros your costs. You have an indirect cost, a flat rate of 7%. This is over all the direct costs except volunteer and land purchase. Except where the calls where this is not allowed, of course. If you are an organization which already receives an operating grant, normally this is not allowed unless you can demonstrate in your accounting system you have a way of separating and there's no double funding. For the unit costs, this is where you can get some guidance on how to calculate this unit costs. I will come back to that later. Next slide, please. So some of you have already been asking in Slido, and please keep those questions coming. We will be looking into them later on. What is the co-funding rate? So it really depends on the type of action that you will be applying for. So for the standard action projects, the SAPs, it's 60%, with the exception of nature and biodiversity. So it will be higher, 75%, if it's exclusively priority habitats or species, and 67% if it's priority and non-priority habitats and species. Then you have the strategic nature and integration projects, that's 60%. Any technical assistance projects, TAPPs and TARs are 60, and then the CAPs are 95. And then other actions, it differs. For example, SET, so clean energy transition, is 95%, and then operating grants is 70%. Next slide, please. So how is it calculated, the maximum EU funding of your grants? So it's based on the eligible costs. So the system will calculate for each beneficiary the theoretical maximum. Each beneficiary, so you, when you will go into the system, you can enter a lower EU funding requested. So either because you have co-financers, or you predict that you will have income from your project, or you have own resources higher, that is possible. Then the maximum grant amount will be decided by the EU, and it normally corresponds to the requested amount, but it also may be lower. Please note that the amount at the interim and final payment shall not be higher than the amount which is fixed in the grant agreement. So if you decide to request lower, please bear this in mind, that at the end this will be reflected. Next slide, please. So what are the payment types? And this is very important for your planning, of course, on how you will choose the reporting periods of your action. So each action always starts with a pre-financing. Normally the pre-financing is around 30%. This is also indicated in the code text. And then for most actions, there will be additional pre-financings and a final payment. For some actions, namely the strategic nature and integration projects, interim payments are foreseen. And then for the TAPPs, only a final payment is foreseen. So what is the difference between an additional pre-financing and an interim payment? Is with additional pre-financing, you will get another cash injection, so another advance payment. Whereas in the interim payment, we are already checking some costs. And so the amount of cash that you will receive will depend on the costs that you have incurred, whereas in the first one, it will be a percentage. However, also depending on the amount that you have consumed before. So please take note that the amount of the reporting periods and the duration will have an impact on the percentage of each additional pre-financing or the amount that will be paid, reflecting the costs that you have already incurred. Next slide, please. So what are the eligible costs? How do we evaluate that they are eligible? Of course, they have to be incurred either by you or by your affiliated entity and during the duration of the project, except of course the final reporting or the audit report if you have to submit one. It has to be foreseen in the grant agreement, so belonging to one of the budget categories of the call. Otherwise, you will have to do an amendment and request the introduction of new costs. It needs to be directly related to the action and necessary, identifiable, verifiable, and the accounts of the beneficiary. So please remember that your action might be subject either to our ex ante controls, also to audits after you receive interim or final payments. And lastly, oh, sorry, I forgot. It needs to be compliant with the national laws and taxes, of course, labor and social security. And lastly, the costs need to be reasonable, justify, and comply with the principle of sound financial management. This means that if we find costs not justified, excessive, then we reserve the right to reject them. Next slide, please. Of course, for unit costs and flat rates, this is slightly different because they need to be also declared in the correct budget category. Of course, the costs which the flat rate relates to need to be eligible as well, incurred in the period of the action. They need to be necessary for the implementation and very important for unit costs. The particular point on how you calculated the units, the number of units is of much relevance. And here we indicate the article where you can find further information on this, namely Article 20 of the Model Grant Agreement. Next slide, please. So what are the types of costs that you will have to put in your foreseeable costs? So how do you translate your action into costs and where will you indicate them? So first you need to take into consideration that you can only indicate direct costs. So anything which is indirect costs calculated through a percentage or cost drives, they will be in the 7% flat rate. So please do not put them elsewhere. So you have these main four types of costs: personal costs, subcontracting, purchase costs, and other cost categories. So in personal costs, you have 5 different types of categories that we will be looking at in a minute. Then subcontracting, purchase cost, there are 3 types. And then the financial support to third parties, land purchase, which is other cost. And I will be going into each one of these. Next slide, please. So starting with personal costs, I mean, most of our actions we see that the A1 costs for employees are equivalent are the most common ones. So what costs can you declare? Salaries, social security contributions, other costs linked to remuneration, either arising from national law or from the employment contract, and also if they are usual to your practice. So if they are usual to the organization. Then A2, natural persons. So they are working under direct contract under the other than the employment contract, and seconded persons. So seconded persons by a third party, but that you are paying, so against payment. And these costs are eligible on top of all the other conditions, of course, with these 2 additional ones. So the work of A2 and A3 employees or working persons are eligible if the work conditions are similar to your employees, namely the way the work is done, the tasks, the premises, and also, for example, teleworking conditions, also salaries, they have to be similar, and the result of the work belongs to the beneficiary unless it has been agreed otherwise. Then you have SME owners or natural persons not receiving a salary. Here, their unit costs. And then lastly, the volunteers. So they are persons that work freely for your organization. It's not compulsory, but they don't get paid. I will go into that later. Next slide, please. So how do you calculate this? Basically, you take what it costs, a person costs you, your employee costs you in a year, you divide it by 12 and you divide by person months. And then you have the number of equivalent days to be budgeted by this for this person per year. Please note, and we strongly invite you to read the annotated grant, the annotated grant agreement, the section on personal costs, on how it's calculated, because this has really changed in relation to the Life Legacy program. And for example, one of the things that you can see that is already different is that the maximum equivalent days that you can declare is 215 per year. Okay. Then for the costs of natural persons and seconded personnel, this really depends on the type of contract that you have. So we really invite you to go into the contract and have a look there on what the costs that you may have. And remembering, of course, that the conditions, the working conditions need to be similar to your employees. Next slide, please. For the SME owners and natural persons not receiving a salary, if they are receiving a salary, you need to put them in A1. And the A5 volunteers, this is how it's done. You need to go into the model grant agreement into Annex 2.8, and there you will find the formula, which is indicated here for the SME owners. So basically you divide 5,080 by 18, you get this amount, and then you need to multiply it by the country specific coefficient. And this is how you get your unit cost, your daily rate. And then you must multiply by the number of unit or costs or daily rates that you think this person will work. For the volunteer costs, this is slightly different. There is an amount per country indicated, so you just need to consult that. There is these different these conditions. So the amount of volunteers costs that you will declare is maximum 50% of the total project costs and contributions, and the maximum EU contribution cannot be higher than the total eligible costs without volunteers. So it's a tricky concept to grasp. So I advise you put it in an Excel, and then you will see that it's not so difficult then to check this. Please bear in mind that when you are reporting later on at interim or final payment stage, you may not exceed this maximum amount. And for volunteers, we really stress that this is not, it's the only exception. It's not really a cost because you don't have to pay. And the aim is really to help you increase the costs so that we will give you a higher EU contribution, but it is very important that you understand that you will not be transferring any money to the volunteers. You will not be paying them. Next slide, please. So now we come to the second cost category, namely subcontracting. As usual, it needs to comply with the general eligibility conditions that I've just mentioned. It's awarded using the beneficiary's usual purchasing practices. And very important, it needs to ensure two things: best value for money, if it's appropriate, then the lowest price, and no conflict of interests. It may only cover a limited part of the action. So we've just mentioned to you, you will see in the Annex 1 detailed budget, the reference is 30%, unless it's properly justified, and we have accepted this. However, if you are a contracting authority entity within the meaning of the EU directives on public procurement, you must also comply with applicable national law or public procurement. And very important, of course, in subcontracting is that the coordination of the action cannot be subcontracted. The coordination of the action of your project cannot be attributed to another entity. It's very important that, of course, this stays within the consortium. Next slide, please. So there is normally some confusion, and sometimes even we have difficulties in assessing, is this subcontracting or is this a purchase of a service, goods or works? So we give you some examples. So on subcontracting, you really have subcontracts which concern action tasks. And the price for the subcontracts will be under subcontracting costs, so under section B. Examples of purchases, it can be travels, equipments, goods and services that are necessary for your action, but they are not an important part, an action task of the action. We give you some examples. For example, if you are requested to, if you reach the threshold for the certificate on financial statements, then you will be requested to do one, to provide one, and this is not subcontracting. This will be in services. Translation of documents, publication of brochures, contract of transportation, so purchase of a cost, meeting rooms, catering, this is also a purchase cost. Hiring, for example, consultants, legal experts, IT consultant, this is normally also a purchase cost. However, if you are contracting, for example, carrying out of energy audits, then if this is an action task, this will be subcontracting. If you have doubts, then put it in subcontracting. And if your application will be selected for funding, we can always come back to you and ask for clarification, and then you can always move it to the right cost category. Next slide, please. So we come to the third cost category, purchase costs. Travel and subsistence, you need to calculate it in line with your usual practices. In terms of equipment, you need to check the call document because there are two possibilities. One is that you can only claim depreciation, and the next one, it will be in the next slide, is you can claim full cost and then you need to provide a list. So if you are under option one, only depreciation of costs, you can declare costs which are actually incurred and written off in your accountancy. Only the portion of the costs that correspond to the rate of actual use. So please pay attention to the duration of your action. And then if you decide to rent or to lease, this is possible, but then these costs cannot exceed the usual amount that you would pay for the depreciation of a similar equipment. Next slide, please. So the equipment, this is the section option, and I was just telling you about. So you can declare the full cost of the equipment, but then you need to comply with the durability clause, which you will find described in Annex 5 of the Model Grant Agreement. Or you can depreciate, and if you depreciate, you need to list the equipment. So this equipment will be then listed in your grant agreement. And this is, for example, allowed for the standard action projects, the strategic nature, and integrated projects. So the equipment needs to be purchased and developed specifically for the action. And additionally, you need to commit to use and maintaining using this equipment after the end of the action for activities pursuing the action's objectives. And the duration needs to be at least 5 years after the end of the action or until this equipment has been fully depreciated. whichever is earlier. And of course, this needs to be recorded in your accounting system as a fixed asset amount and according to international and your usual standards. Next slide, please. Here I come to the third type of sub cost category, so goods, works and services. I've already given you some examples. For example, the certificate on financial statements, translations, publications, campaigns, promotions, also consumables and supplies, which are not indirect costs. If they are really specific to the action, otherwise they are covered by the flat rate. And the CFS, which will be requested if you request more, equal or more than 500,000 EU contribution. And please note that this is per beneficiary and affiliated entity. For operating grants, the threshold is 100,000. Next slide, please. And I'm trying to look at the time, if I still have a lot or not. Okay, I still have half an hour. Thanks, that's great. So now we come to the last cost category, which is financial support to third parties. This is only allowed in some calls, so please check if this is your case. So what does this constitute? This is, as the name indicates, this is support. This is cash money that you will be giving to third entities, which are not going to be in the grant agreement. And this is in the form of grants or prices or similar forms of support. And in order for them to be eligible, they need to be in the call, of course, where there is indicated a maximum amount per action and third party. They need to fulfill the general eligibility conditions, of course, calculated on the basis of the costs actually incurred, and they really need to be well explained, all the criteria I will indicate in the next slide, in the Annex 1. Next slide, please. So these are the conditions that we really request you to mention in Annex 1. And depending on what it is, this is the criteria that you need to indicate. So for grants, you need to indicate which is the amount per third party, how you will be calculating this amount, what are the different types of activities that you want to finance or that you want these entities to finance, what type of persons or categories could receive such a report, and finally, which is the criteria and procedures that you will be using to give this financial support. So we understand that it's difficult perhaps at this stage that you know already this, but you really need to give us as much detail as possible, and you really need to at least indicate something in each of these criteria. We need to understand and we need to perceive it as justified, necessary, and then accept this. In terms of price, what is the eligibility and award criteria? What will be the amount of the prize and how will you be paying these prices? And again, you need to provide as much detail as you can. Next slide, please. So we come to the last cost category, which is land purchase. This is also very specific. So these are costs that would be incurred by private entities. They would include long-term lease of land or also one-off compensations for the use of land rights. They will be eligible if they will be foreseen in the call. Also the general eligibility conditions that I indicated based on the costs actually incurred, and they need to comply with land purchase criteria. Next slide, please. So what is this land purchase criteria? So it needs to contribute to improving, maintaining, restoring the integrity of Natura 2000 network, is the only or most cost-effective way of achieving the objectives of this conservation action. It's reserved in long term for uses consistent with the specific objectives of the LIFE program. The member state where this land is going to be purchased ensures that there is a long-term assignment of such land to nature conservation
by ensuring that there is an entry into the land register. I just heard something in my micro. I hope I am not having any problems with my microphone.
We can hear you now well, Licinia, don't worry.
Okay, I had to do something with my micro. Sorry for that. So the beneficiary, so you would have to entry this into the land register, includes a condition that the land will be assigned definitely to nature conservation, or if there is no land register or such a condition is not possible under national law, then that such condition is either included in the land sale contract or guaranteed by equivalent means. Next slide, please. So, what should the private beneficiaries do to ensure that there's long-term conservation? You need to make sure that the entry into the land register includes a condition that in case of dissolution or incapacity to manage the land according to nature conservation requirements, the property will be transferred to an entity primarily active in the field of nature protection, or if there is no land register, then that this is included in the sale contract or guaranteed by equivalent means. For purchases of partial rights, you need to ensure the entry into the land register reflects the long-term nature conservation objectives and the requirements which you will be seeing in the model grant agreement. For land purchase to be exchanged at a later date for another parcel on which the action will be undertaken, then what you need to do is the exchange is carried out before the end of the action, and you need to check again the requirements in the model grant agreement. And finally, for long-term leases, the lease is of at least 20 years, and it includes provisions and commitments that ensure the achievement of the objective.
Protection.
Sorry, Licinia, we can't hear you well. No.
Yes, it's again my microphone.
An issue with the microphone. Now we hear you.
Great. Next slide, please. So we've talking about the direct costs. Now the indirect costs. So it's 7% of the direct costs, excepting volunteer costs and land purchase. And again, if you have an operating grant, these are normally not allowed unless you can demonstrate that your accounting system does not cover any costs of the action grant. Next slide, please. So we've now covered all the eligible costs, direct and indirect. Now we go into looking into the most typical ineligible costs, and these you will find also in the grant agreement. These are only some examples, so if you have doubts, please also check the annotated grant agreement. So here are highlighted some of the most common ones. Namely, I will just refer to VAT. So if it's deductible or refundable, then it's not eligible. This is the rule that we use to declare if it's eligible or not. Next slide, please. So here is also an indication of costs that are not eligible. The first one relates to double funding. Okay, so obviously, if you are already receiving contribution, EU contribution for other grants, of course, that you cannot declare the same costs in two different EU grants. This will be receiving twice for the same cost. Of course, this is not allowed. Also, costs or contribution for staff of a national administration. If these activities are already part of the administration's normal activities. And then also costs or contributions, especially travel or subsistence for the staff or representatives of EU institutions, bodies, and agencies, so us. Costs specifically declared ineligible in the related call. So again, please go to the call and see if there's a specific cost which is not eligible. For example, separate website costs are only eligible if justified, etc. So please always check the call text for this. Next slide, please. So finalizing, we just wanted to mention some frequent errors. So these are things that we have seen in the proposals received in the last 2 years. In terms of personal costs, for example, SME owners not receiving salary should be indicated in the section A4, and sometimes they're indicated in A1. So when this is the case, then we ask for the correction. When the threshold is reached, sometimes the certificate on financial statements is missing from the Annex 1, or it's too expensive. Sometimes the subcontracting costs are indicated as subcontracting, but they are not outsourcing action project tasks. So we ask them to be indicated under the section C3, purchase of costs. For the equipment in the Annex 1 detailed budget, there is no indication if this is a full cost or a depreciation. If you have only the option 1, depreciation, of course, this is obvious that everything is to be depreciated. But if you have the option 2, either full cost or a list of the equipment, you need to indicate in the Annex 1 if it's full cost or depreciated. For finance support to third parties, the criteria is not explained, sometimes not at all. Some of the criteria is not addressed at all. And it's all spread out in different sections of the proposal. So we would ask you to put this is in one section and addressing all the criteria. Also, sometimes in the Annex 1 detailed budget, there is a big cost and there's no explanations or details attached to this cost. And of course, then we have no elements to assess if these are justified, are necessary. And so, of course, if the proposal is selected for funding, we will have to come back to you to get a further clarification. So it's good also that right from the start, you do this correctly, and you know also the level of detail that you need to indicate in a proposal so that we can correctly assess it and also award points on your proposal accordingly. And I think that's the next slide will be my final slide. So thank you so much. I think in the end I was quite okay. I'm well in advance.
Wow, Licinia, I'm impressed. You managed to go through the whole presentation really clearly and very quickly. So you even caught up the delay. So thanks a lot. I think the presentation was very clear and very insightful. So I think, I hope it was clear for everybody, and everybody now knows what are the main rules and how to apply for life funding, and especially on the financial aspects of the application. So thanks a lot, Licinia.